Warren Buffett, Charlie Munger, Michael Burry, Nassim Taleb, John Paulson. What do these people have in common? They're all crypto skeptics. Each of them repeatedly said the Bitcoin will soon come to the end. Cryptocurrency is just a toy, and that crypto investments should be abandoned. Some speak less radically, some more. But what motivates them? Why Warren Buffett, leading investor and founder of Berkshire Hathaway, one of the largest funds in the world, Nassim Taleb, author of Black Swan, and Michael Burry, an investor who made his fortune in the 2007 crisis, are so united in their disbelief in crypto, and why are there still a huge number of people making money from it? Buffett said that Bitcoin is a rat poison. Warren Buffett is a billionaire who started from scratch. He built his empire on managing inefficient companies that produce goods, physical or electronic. He bought loss-making companies, optimized them, and made a profit. That is, he was working with something tangible. Bitcoin, in fact, doesn't exist and, according to Buffett, is not backed by anything. In other words, cryptocurrency doesn't fit into his picture of the world. However, years after Warren Buffett called Bitcoin rat poison, he invested $1 billion in a crypto-friendly bank, after which Bitcoin characteristically rose. The same goes from co-founder and vice chairman of Berkshire Hathaway and Buffett's right-hand man, Charlie Munger. Munger is the 98-year-old billionaire investor. He went further than his colleague in his remarks, calling Bitcoin and similar currencies a venereal disease. "I certainly didn't invest in crypto. I'm proud of the fact I've avoided it. It's like a venereal disease or something. I just regard it as beneath contempt." When asked at the Daily Journal AGM what he thought was crazy, Bitcoin's over $50,000 growth or Tesla's over $1 billion market capitalization, Munger replied that it was impossible to tell which was worse, fleas or lice. It is the same with Tesla and Bitcoin. It is impossible to determine which of these two variants is worse. Slightly different is the case of Nassim Taleb, whose major works are The Black Swan, The Impact of the Highly Improbable, and Anti-Fragile, Things That Gain from Disorder. Taleb calls Bitcoin great fun for losers at low interest rates and believes that Bitcoin is not insurance against geopolitical risks. The Economist considers blockchain a very promising technology and doesn't reject the idea of decentralized currency itself. But Bitcoin, as the first popular coin, cannot yet be controlled, and therein lies its strength. And as soon as the state central control over its circulation is introduced, the main dignity of the coin will disappear, followed by a natural collapse in price. And those who don't understand this are complete idiots, concludes Taleb. Bitcoin is also not suitable for hedging risks. According to the investor, those who call the first cryptocurrency a means of hedging financial or any other risks are crooks with a reference and complete idiots. Michael Burry, an investor you may know from the movie The Big Short, played by Christian Bale, is also a cryptocurrency skeptic. The renowned investor, of course, believes in their future, but now he compares it with the bubble of 2007, on which, incidentally, he made his fortune by playing against the market. Burry says, "Cryptocurrencies are excessively volatile. Yes, you can short them, but do you have to secure a loan? Is there a short rebate? Can the position be squeezed and called in? In such volatile situations, I tend to think it's best not to short." Another man who made his fortune from the 2007 crisis is John Paulson, an investor who built his fortune on playing against the market, selling subprime mortgages short, called crypto a worthless bubble. Unlike previous crypto skeptics, Paulson doesn't believe in the future of crypto at all. "I wouldn't recommend anyone invest in cryptocurrencies. I would describe them as a limited supply of nothing. So to the extent there is more demand than the limited supply, the price would go up. But to the extent the demand falls, then the price would go down. There's no intrinsic value to any of the cryptocurrencies, except that there's a limited amount." Last year, Paulson was fired as head of the hedge fund. Paulson's dismissal may have been due to the fact that in recent years, digital assets have greatly outperformed gold, in which Paulson was actively invested. The investor's track record since the greatest deal has also been mixed. And now the cryptocurrency began to fall again, although just recently Bitcoin updated its historical high, breaking through $60,000. Amid these events, some of the crypto skeptics stopped being them. For example, Buffett invested in a crypto-friendly bank, and some on the contrary straightened their confidence in it. Its volatility is truly terrifying. Some dub the recent hysteria Renaissance Technologies hedge fund chairman James Harris Simons. By the way, be sure to watch other videos about cryptocurrency on this channel. Links are on the screen right now. See you soon.